And welcome. This is Mary Ellen McGonagle here with your Friday afternoon MEM Edge show, the show where we bring you where the action is in the broader markets. Let's jump right in here. Take a look at our agenda today. As usual, we're going to see where we closed the markets for the week. Pretty interesting week this period here. And then also some of those headline news that drove price action. Also, going to share with you the fact that earnings and economic data were both the primary drivers of price action this week as we enter into earnings season. Lots of interesting things that are taking shape, and I'll share that with you. Also, continue building your watch list, and this has been a consistent theme. I keep my watch list very narrow, if I may, so that I make a point of overseeing and looking at it quite frequently. And it is shifting over the last 3 to 4 weeks, lots of movement taking place. I'll share some of that with you as well, but let's go ahead and take a look at some of the news that was released this week. We did get a very hot inflation number that was reported, with June posting a 9.1% gain in inflation. That's that core CPI number that came out earlier in the week. Not good news there, however. And then also earlier in the week, we did see movement in software stocks, and up front and center there was the fact that Microsoft was downgraded by a very major Morgan Stanley Wall Street firm, and that in turn dampened other software stocks. In addition, a major software name, their CEO came out and guided lower as it relates to economic headwinds. So both of those facts did bring that area down. That was earlier in the week. And then we did get producer price PPI. That's another inflation metric, and it did jump, all due to high energy costs, those high oil costs coming in. Although weekly jobless claims did rise again, the highest since November. This was the second week that we saw a rise in jobless claims. A little unexpected, but it is a metric that we want to see, or at least the Fed, as it relates to a potential cooling off of the economy and then inflation. But we did see exactly the opposite on Friday today, with retail sales numbers coming in quite strongly. Consumer sentiment also rose. Both numbers came in higher than anticipated. However, unexpectedly, the markets are championing this news, and we are seeing a nice rally here today on Friday. Next week, a very light calendar as it relates to economic data, and in turn, we may see more reaction to earnings with that lack of an economic news backdrop, but that will of course remain to be seen. Let's go ahead and take a look at those markets and see where did we close the week. This is a daily price chart of the S&P 500. I talked about the market selling off for the most part, but here we are with today's 1.7% rally, and that was enough to push the S&P 500 back above this green 10-day simple moving average. And the relevance there is that you want to see that take place, of course, as a potential precedence to, at some point, breaking back above this 50-day simple moving average. So generally good as it relates to closing the week on a fairly positive note as it relates to the price action. However, we can see those outside momentum indicators remain in negative territory. This is the RSI. That's a relative strength indicator. We want that momentum to be up above 50, and stochastics, a faster moving momentum indicator, did close the week below that 50. So we are net not in a good position, certainly with the S&P 500. So let's take this a step further, drill down behind those S&P and that broader market view. And we are looking at the 11 sectors within the S&P 500. I've gone ahead, added that relative strength indicator, sorted these sectors by descending order, and take a look. This is very similar to what we did see last week, in the sense that up here at the forefront, we continue to have generally defensive areas: healthcare, XLV, XLP. These are 2-month daily price chart views of those sectors, and technology. And this is an area that snuck in last week. primarily due to really outsized returns in those mega cap FANG, Tesla as well. And it did give back a lot of that in the beginning of this week, but we are ending the week on a somewhat strong note as it relates to tech. I will get into this a little bit more as it relates to where that strength is. And then consumer discretionary up here in the forefront as well. And of course, the retail sales and consumer sentiment numbers are helping. However, in screening for stocks in both of these sectors, these are the growth areas, tech and discretionary. There are only a very, very small percentage of stocks that are trading above each of those moving averages in a constructive period. So not a whole lot of breadth. It's more a lot in the way of bottom fishing. We can get more into that as we move forward here. And then utility stocks still up here in the forefront. They were down very little, 0.2% for the week, same for the staples. So those were the outperformers. That's relative to the S&P 500, down 1.2%. So as we drill down, these are going to be your weaker sectors. We can see energy still struggling here. The group was down the most this week, down 3.6%. As we move forward, I will share with you the price of oil, one of the primary drivers. And then there are other dynamics driving energy lower. China did close Macau for a week, and other slowdowns potentially economically on the global front. So let's dig right in and go ahead, take this a step further, sharing with you ETFs that I find really helpful as it relates to staying on top of where the price movement is, where there may be that relative outperformance. And it's all about capturing potential sector rotation. And then, of course, we do want to see a broadening out beyond those more staid staples and utilities and healthcare areas. So here we are with these various ETFs. First up, very impactful here, the US dollar continues to rise, and any number of factors are as to why that is taking place. But the US dollar is that safe haven in an otherwise uncertain market. We'll take a look at some of the areas impacted by that. Biotechs up here remaining in the forefront. This is a group that was first to this upside move that is taking place very, very selectively. And so we can see biotechs here up, but they did pull back this week, down almost 3%, but we are holding firm into the close for the week. And this is a very expected, certainly from my work, pullback, given the 4-week outperformance that we saw, very natural pullback taking place. Still a lot of constructive charts beneath the surface here in biotechs. But here's one area that is on the move, very much earnings related. This is the Semiconductor ETF, SOXX. The group is up 3% for the week, relative to the NASDAQ, down 1.8%. So let's take a look at some of these dynamics within this semiconductor ETF, SOXX, and we can see that it has broken back above this 21-day simple moving average, 10-day poised to cross back up above that 21. And of course, we are going to pay close attention at this 50-day simple moving average. That's this red line here. Let's take a look at those momentum indicators. We can see the RSI just trending into positive territory. We can see on this moving average, convergence, divergence, MACD, that black line crossing up through the red, signaling this severe downtrend over the near term has ended. And a lot of that due to earnings. I'll share with you the primary company that came out with news this week that has other semiconductor stocks on the move. So from here, let's go ahead and take a look at some of these other areas. I talked about software with Microsoft and ServiceNow, both downgrading their outlook. And take a look. This is IGB, the software ETF. We can see that it was in the throes last week. So hopeful, so encouraging with that break back above that 50. And of course, this week it has given that back. Now, it's not particularly, let's see if I can pull up a larger chart here. I do want to share with you the volume dynamics this week. Super high volume on that selling, and that is distribution. So setting the software group back again to being in a confirmed downtrend. Let's go ahead and take a look at some of these other ETFs here that I view as highly impactful. And here we are with Brent crude oil prices dipping down below 95, closing the week at about 99. Either way, below that 100 benchmark level. That a break back above that would be viewed certainly potentially constructive for energy stocks, but we do remain down in this lower below 100 area. So energy stocks still also, we saw in that earlier slide, very much in a downtrend. But here's some good news. The volatility index, this is VIX. Of course, this is also known as the fear index. And we can see, particularly on today's price action, the rally that we're seeing in the markets, the volatility is down about 8%. So we're down at that 24 level, still elevated. 16 to 18 for volatility is what you want to see, ideally, indicating a market that is on firmer footing. So we're not quite there yet, but at the very least, heading in the right direction. I talked about this concept that earnings were the primary driver in addition to headline news. So let's go ahead from here, and I am going to share with you that semiconductor company that came out with earnings that were above estimates, but even more importantly, this is Taiwan Semiconductor, TSM. The company guided their estimates higher. They're seeing very strong semiconductor chip demand, primarily from high car demand. That's one of the areas that they provide chips to. And we can see this nice rally that is taking place in response. However, that confirmed downtrend is still very much in place. We do have a positive RSI that's constructive. However, we've seen that before where semis attempt to reverse and then pull back. So we are still early in this potential turnaround. Certainly with TSM, we are getting that nice MACD crossover. From here, I can share with you a couple of other names, and this is where this watch list is really going to be helpful. And I'm going to share with you a name that has been on my watch list, and I'll share with you why. This is Qualcomm, and the relevance on its own does not appear to be here, but the important metrics as it relates to Qualcomm is it is one of the very few semiconductor stocks that are back above their 50-day simple moving average, and then also with these shorter term moving averages now trending upward. And this is very unique. There are almost 100 stocks in the semiconductor space, and among them a handful of super small cap names. And then here we have Qualcomm this week poised to break out of this base, this 200-day simple moving average next area of possible upside resistance. And we can see this RSI trending upward, MACD making it into positive territory in addition to strong growth prospects. Qualcomm trades at a very low multiple. Let's take a look at this full quote here on StockCharts.com. And up in this top area here, you will be provided with not only the multiple, the PE, it's trading close to 15 times. That's below the average of all stocks in the S&P 500, which are trading at 17 times, but it also offers a nice yield, 1.9%. And this is something that was cited in an article this week in Barron's, and then other actually due to a Wall Street upgrade because of their growth prospects combined with that lower multiple, a cheap growth stock in their estimation. So from here, I do want to talk about some of these other companies that did report earnings this week and were impactful as it relates to the broader markets. And from there, I will share with you names that are due to report next week. It really heats up quite a bit. This week, it was all about earnings, and there are any number of earnings names that we can take a look at. However, I will share with you, rather than go down that road, I'm going to share with you the stock that had the most positive impact on bank stocks. This is Citigroup. We can see the name is up 13%, almost unheard of. I'm trying to see where you may have to go back to get that type of an advance in a bank stock. And the reasons are the company came in above estimates on both earnings and sales, a lot due to trading activity, their capital markets area, but also the Fed's increase in interest rates is helping profit margins on lending activity. That is a common theme among these banks that are coming in a little bit above estimates. So we can see this nice break above these moving averages. So this particular report was one that helped pull some of the names that reported earlier in the week up and out. Wells Fargo also came out with relatively good news. You have to realize that we are in a very depressed period, and any kind of good news is being met with positive reaction. And that is what you want to see. It's all about investor sentiment. Are they receiving that good news? And then in turn, pushing the stock higher. So here's Wells Fargo up 6%. Wall Street likes their numbers. They are in a turnaround phase, and they feel that given the release of their recent Q2 earnings, that they are on the path. So from there, a number of other bank stocks did rally, but this is another area where I screened for stocks within this group that are constructive, and it is a very, very slim group indeed. But as it relates to earnings and investors' response, good news. Let's take a look at another company that pushed a particular sector higher. This is UnitedHealth Health Group, UNH. We can see this nice gap up here, up 5%. The company came out with strong numbers and guided higher. So we are seeing nice volume on this gap up. Stocks poised to trade. Actually, the markets are closed. It is closing the day in the upper trading range for the day, which is quite constructive. From here, we did see a number of other stocks in this group trend higher in response. Again, that's what you do want to see with an eye toward the broader markets as it relates to broadening out in response to strong numbers. So from here, I'm going to share with you a couple of names that are due to report, and this is Tesla. They are due to report on Wednesday. And the company did come out with sales numbers that were not good. So there is an already built-in anticipation that Tesla's numbers are not going to be that blowout type of quarter that investors in Tesla are used to. But some dynamics I do want to share with you as it relates to the chart here with Tesla. We can see we have these higher lows. That is one generally constructive area. And the price of the stock this is last week's big move in a lot of these mega cap names. And it is poised to potentially break back above that 50-day simple moving average. However, close look here at these momentum indicators. Here's the RSI and that MACD. We're not getting a lot of momentum. This is indicating uncertainty. The bulls and bears are fighting it out down here. So next Wednesday's number could, in fact, be quite telling. A nice break above this 50-day on volume would be really quite encouraging. Let's take a look at a couple of other names that are due to report next week that are looking quite constructive going into their report. This is a automotive retail stock, ORLY, ORLY, and I'm pointing this out because the company and the stock is really on the move ahead of the release of their numbers next Wednesday. Analysts are raising their estimates for this stock. We can see the outside momentum indicators in positive territory, so quite constructive, and that is ideally what we would like to see, certainly spread out elsewhere in the markets. Another known semiconductor stock is really going to see if we continue to have legs in that SOXX semiconductor area. This is ASML, and we can see it's really very much in line with a number of semiconductor stocks, very down and out, but nice gap up today ahead of the release of their earnings next Wednesday. So I'm going to be paying, and I would advise you as well, to pay close attention to their results. Goldman Sachs is coming out on Monday. They had a sympathy gap up today. day based on earnings elsewhere in that banking space. And then another company that can be really impactful, it does tend to get headline attention after they report. This is American Express, AXP. It can often be used as a proxy for consumer spending if we do see an uptick in credit usage. Another last name up here that I do want to share with you, because it is a name that can be very closely watched as well. Intuitive Surgical, ISRG, very down and out. This is a medical products. I'll share with you that ETF very much in line with the sell-off. So ideally, we are going to be on the lookout to see if Intuitive Surgical, of course, depending on their numbers, if they can potentially begin. I'm going to share with you a longer term chart so that you can understand my one of the reasons that I'm going to be paying close attention, and it has a lot to do with historical precedent and the ability for this stock, when it gets going, to really outperform. We've participated in this stock coming out of that 20 bear, also in this 21 period. So fond memories of the stock, looking forward to it potentially coming back into play. So from here, I did want to share with you the Dow because, in fact, let's go ahead and take a look at a chart of the Dow Jones Industrial Average. Not a particularly great looking chart, but on the weekly, you may get a sense, not really very telling, but it has been outperforming certainly the S&P and the NASDAQ. So what I wanted to do very quickly here is share with you those underlying 30 stocks in the Dow and take a look at what may be holding this particular group up and what's on the move. So among the Dow, here are those 30 components, and we can see that today in particular, this is UnitedHealth. I mentioned that to you. Some of these bank stocks that are on the move, American Express rallying ahead of the release of their earnings. And this is something that you can do quite easily. If you have a list here in StockCharts.com, you can view that list as a candle glance. I want to see the 2-month daily price chart view. And then I also want to see that RSI, which names are helping support the outperformance within the Dow Industrials. So here we are with Apple, and this is a chart that is really quite attractive as it relates to the mega cap FANG stocks. It is currently one of the most constructive. We can see this nice move above that 50-day. The stock is due to report their earnings the week after next, but we can see nice positive momentum indicators, indications that are currently taking place with Apple. And then up here in the forefront, I mentioned to you biotech names. This is Amgen. We can also actually, I'm noting it's not sorted. So we can also take a look up here at the forefront at some of these other names. Merck, atop, this is part of my MEM Edge report. I have very few select names on that buy list, but Merck is one of them. It has been outperforming here, but I will share with you now some areas that are of note as it relates to potentially reversing. This is Walmart. WMT, of course, outside momentum indicators just now turning positive, a break above that 50. It's going to have a lot of work to do. This, of course, was their quarterly Q1 earnings, very negative. They guide it lower. So I'm not sure if it's going to be able to supersede these gaps and make it higher, but it is interesting because Costco and a couple of other of those big box major discount retailers are on the move. And then likewise, as we go through this list, we can see other pharma stocks. And of course, you want to be aware of those weaker areas down here. This is going to be those energy names that had been up there in the forefront. 3M, Caterpillar, these are the types of names on a strong US dollar. You will see them falter. A lot of their growth comes globally, and that strong dollar is not good for them. So that is it for this week. Everyone have a wonderful weekend. We're going to have lots more to cover here next Friday. If you have not already, use that link below to trial my MEM Edge report. It's going to be all about what to be on the lookout for going forward to signal that the markets have bottomed, and then also highlighting other factors that I did not have time to get into today. Have a great weekend. See you here next Friday.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.